Szechuan Chinese is like the spiciest.
It's a region of Chinese food.
No, I know, but it's like the spicy one, right?
Yeah, like
A region of
they've
Chinese
got
food. It's a
they've
wild
got the
description.
Szechuan peppercorns, the one where you bite into and your whole mouth goes numb.
You're supposed to avoid those at all costs.
Yeah,
Delicious.
I'll check it out.
Put my mic on!
All right. What episode is this? 102?
Oh wait, Duncan, what was that drop that
All
I
right.
wanted you to include from me?
I'll have to look. I can't remember right off. It was funny though.
It was good. Can't remember. Well, I guess it wasn't that good.
All right, let's make a podcast. What do you think?
Let's do it.
Sounds good? Everybody's ready?
Oh, yes.
Feeling very relaxed. You guys are making me feel very comfortable.
Feeling relaxed.
Same.
Probably the seltzer thing.
Yeah, it's a good suggestion on
All right.
high noon.
John, what show is it?
Josh, Competent Friends, episode 102.
Today's show is brought to you by our friends at Crane Shares. One of the most popular investing strategies over the past couple of years has been covered call strategies, particularly in ETFs. They blew up over the last, 12, 24 months. We've spoken about the Crane Shares China Internet ETF before a million times, KWEB. There is now a covered call strategy on that. The ticker is KLIP. That's CLIP. If you would like to learn more about the fund, visit CraneShares, that's with a K, .com/clip with a K.
Oh, wow. 102. Oh, my God. All right, ladies and gentlemen, welcome back to the Compound and Friends, your favorite podcast about all things investing, finance, Chinese food, you name it. We cover everything on this show. Michael Batnick is here. John is here. Duncan's here. Nicole. Rob is in the background hanging out. And we have two very special guests today. First things first, I'd like to welcome back returning champion, Mr. Sam Rowe. One of my favorite market writers.
Thank you.
One of the best ever to do it.
Thank you.
Sam is the founder and writer of Ticker, a weekly newsletter providing market data, news, and insights for investors. Sam has contributed to Business Insider, Yahoo Finance, Axios, and more. Sam, welcome back to the show.
Thank you. Thanks for having me back.
So happy to have you. And last but not least, coming to the show for the first time, Jack Rains. Jack writes the Young Money blog, a finance-focused blog covering markets, memes, and more. Jack is also an editor at ExecSum, curating the Liquidity newsletter, which provides daily coverage on all things Wall Street and Silicon Valley. Welcome to the show, Jack.
Humbled and honored.
All right. Yo, can we just talk about liquidity for 1 second for people that are not aware of what it is, including myself? I follow all their accounts. I know you're behind some of them. I'm reading the newsletter that you write, Young Money, but I'm also like following all the meme accounts. What exactly is liquidity? Like, what is the corporate structure of liquidity?
I mean, there's not a lot of there's not really a lot of a structure to it. It's one dude. It's not me.
So it's a little bit like the Taliban.
There's C Corp.
I mean, yeah,
What do you mean there's not a lot of structure?
I mean, it's
who is the head terrorist there?
Lit.
Okay.
Liquidity. It's first name Lit, last name Liquidity. Like we've had, like he signs contracts as Liquidity or as like the C Corp.
Is he like extremely funny in real life? Because he's really funny.
He's funny, but he's a lot. He's a lot quieter in real life.
He's like
than
Ramp.
I think it would be on the internet.
Definitely not funny. No offense.
Okay.
Ramp.
Like Ramp's not funny in real life at all. Almost like Ramp almost is depressing in real life.
Like all of his humor comes out through his Twittering out. No, Lit's funny, but he's a lot more.
Wait. Who's the original Liquidity? But like
there's Arbitrage Andy. He went kind of postal after COVID. He's just like alt-right.
Arbitrage
conspiracy.
Andy?
Yeah, he was funny, and then I think he might have gotten laid off during COVID, and now he's predicted the last 7 world wars. He's all over the place.
No, but I was asking you, remember the website? What's the guy?
The website. You gotta do better.
Dude, he was hilarious. I don't know if he's still around.
There's a guy with a website.
He used to go to his own conference, but in costume.
Oh my God, The Fly.
Oh my God. So you don't know about this.
That's before my time.
Way before you and Liquidity and even Instagram. He's still around.
Legend.
He's a legend. I can't say his name. There's a guy named The Fly, and he had a site called iBankCoin, and this was a true maniac.
Was iBank Coin the first cryptocurrency?
No, but this is like
nothing to do with crypto.
This is like liquidity.
He's still pretty active on.
He's still on Twitter.
I've seen him on Twitter.
I didn't know that
Shout
there was.
to Fly.
I didn't know that there was.
I
a
love
live
this guy.
component.
No, but he would have events. He would hold an event and go in a costume. Nobody would know who it was.
He would show up in like a fake mustache, and nobody.
No, but for real, nobody knew who it was.
Nobody knew who it was.
Wow.
So he would attend.
That's
He
cool.
would attend his own. But I don't mean like a conference, like some bullshit thing.
Do people know what he looks like without the mustache?
No,
I know, but-
he wasn't
okay.
really a costume. Nobody knew who he was.
Yeah.
He wasn't actually
No,
wearing a
but he
fake
had
mustache.
a name tag with a fake name.
Yes.
But so he was like an anonymous. I'll tell you why I'm bringing it up to you. So similar to liquidity, like nobody knows who he is, but hilarious. He was like a day trader who wrote about markets.
Yeah.
But when I say he would attend his own event, I don't mean like a bullshit event. He would rent out the Harvard Club, and he would have all these degenerate day traders.
Probably
who
200
read
people there.
Yeah. There were like media there. There was like press covering this, and he would be there in like a sweater vest with his hair combed to the
So
side.
the whole event, people are like, "Are you the
Let's try to
fly?
figure out who-
Are
yeah.
you the fly? Are you the fly?"
It's like Clue, but
Exactly.
like a conference.
Dude, this is a real guy. All right, shout out to the Fly.
Anyway, did not think we would be talking about the fly.
Okay. Anyway, so liquidity. It's more of like it's like a movement though. It's like because like a lot of people are now doing financial memes and they're imitating the memes that you guys do, or they're resharing your memes. But it's a big deal.
Yeah, the problem is he managed to figure out how to make a business out of it with the newsletter and then stuff coming off of that. A lot of the other
He's selling ads in the newsletter. That's the business.
There's that,
Okay.
and then now he's like a venture scout for Bain. Like has like a lot of different stuff going on. Like a lot of the other meme accounts have a lot of like attention online, but it's hard for them to like. You can't just like sell sponsored memes. That doesn't work.
It's hard to
Like,
monetize memes.
Yeah, 100%.
Okay. So, but if you're a real guy or gal on Wall Street or in hedge funds or in private equity and you see the liquidity stuff, you could tell this is somebody that's intelligent.
Yeah.
So that became like a door opener to do like real stuff behind the scenes.
Yeah, because he worked in it for like 7 or 8 years. So like the newsletters, while we do have a meme section at the bottom, it's like all the mergers and acquisitions, venture capital deal flow, earnings recap.
Jack,
So it's
believe it or not everybody knows what a meme is. Most people do.
Right.
But give an example of like one of your most viral memes. Like, what does that look like for the audience who's like, what's a meme?
I mean,
So-
everything that has hashtag ref on it, like you only know what that means if you spent your entire career on Excel.
Yes.
And then all the EBITDA stuff. Did you guys invent EBITDA?
Yes.
Maybe. There's a whole video he put, the Saving Capital Markets. I don't know if you guys saw that, where it was like it was from like Saving Private Ryan.
Oh.
And it's like
So
Mona
good.
Lisa of meme videos. But like the entire thing is just like it's hard to do I don't know if we can like somehow embed this in the video version of the
No,
podcast.
we'll put links to some stuff. My favorite one is the one where it's like if this is your boss, you're gonna survive. Your company's gonna survive the
Oh
recession.
yeah, like the guy in the like just awful
I can't even
loafers or whatever.
describe, but like
Yeah.
the slacks that are like gigantic and then taper down to the ankle.
Yeah.
And then like the shoes that look like they were bought at like Payless. It's like if this is your CEO, your company's going to survive the recession.
Dad's
Yeah.
starter pack is an example of a meme.
Yeah.
The starter
Yeah.
packs. That's a great meme format, obviously.
What was the pastor? There was a pastor.
Oh wait, here's a good meme. It's the
I know
one
what you're talking about.
from the Barbie movie where it's got the two of them. And it's like rich influencer girlfriend works 14 hours a day and private equity boyfriend. Like
Yeah.
this is a good meme.
There's a lot of Barbie and
Yeah,
Oppenheimer
a lot of
memes.
Barbie memes.
All right, John, you'll throw
Wait,
some
can
up
I
in
just
the video,
one last question
right?
on that
Yeah.
is tell me about the process of making a meme. Are you like sitting down like, all right, I got to like, or does it just like snap occur to you?
Start with edibles.
How do you produce a meme?
Smoke weed.
Smoke
Step
weed.
one.
Smoke weed and read
it's-
stock
So there's
market news.
stuff that just like blows up that gets funny where like a picture goes viral and then people just make a caption that's related to something entirely different that uses that image. Like the Barbie Oppenheimer is the biggest it's the biggest zeitgeist of memes right now. But if you're a finance meme page, you somehow relate that image to something finance,
Right.
like influencer girlfriend, private equity boyfriend, stuff
Anything
like that.
that's like big in pop culture right now can be like very easily turned into a financial meme.
I do think memeing is almost like
The king.
Oh, yeah,
yes,
that's one of the best ever.
that might be the best meme. Those videos are insane.
Yeah.
The dude just with two teeth just cracking up. Does anybody actually know what they were talking about in the original video? Somebody
I
has
saw
to.
Trung broke it down. He actually wrote out the entire, like he translated it one time and
Is
wrote
it
out what
funny?
it was. It's just like,
Probably
but
not.
it's something stupid. It's from some like It's from some like I think I know he's from Latin America. I don't know if it's Mexico, but it was like a Mexican or Latin American talk show, and he was just cracking up about something on a show.
Two guys, they're both cracking up uncontrollably.
Like
But
there are mushrooms.
doesn't that remind you of the Hitler meme from the movie Downfall?
Yeah.
Where they did that during the financial crisis 15 years ago. But that was like one of the original finance memes where they would make it like Hitler is running the Federal Reserve or
Nice.
Hitler's running the Treasury or he's the CEO of Goldman Sachs, and they would just change the subtitles out. And it's Hitler profusely sweating and screaming at everyone around him. But they kind of memed it, and I think that was an early.
It's like every like backup plan that he had during that phase of World War II was just all falling apart. So it's like every time you heard about a business or like markets,
bailouts.
The bailouts. It's like, well, we're gonna do this or this is gonna happen, but it's like, no, you have advisors saying, no, that actually failed. We tried that. That's not gonna work. You're just gonna end up in bankruptcy.
And by the end, he's slamming the table.
Right.
But all right. So memes have been around for a while. You guys just do it at a very elevated level.
Right.
Very cool. Now, your accent. What part of Long Island are you from?
South Georgia.
South Georgia.
Right.
Okay. Very cool. How long have you been up here?
1 year.
Okay. And you were taking classes at Columbia?
I am taking
You're
classes.
getting your
at Columbia.
MBA.
I'm working on it.
Okay. Dude, very cool. You're doing a lot of things.
Thank you.
For a young man.
Thank you.
Let's talk about the markets. Oh, wait. Actually, yeah. Let's talk about the markets. I want to lead off by saying we have basically lost all sense of decorum. This has just gotten completely out of control. And I know today the NASDAQ's down and they're beating up some of the biggest gainers of the year, and that's great. This is from Ed Yardeni. In the brave new world of AI, investors seem to be willing to pay a higher valuation multiple for earnings, especially of the mega cap 8. Could it be that the historical fair value PE of 15 is history?
Yes.
It might be in the roaring 2020s dominated by the mega cap 8, which currently account for 27% of the market cap of the S&P 500 and sport a 31.2 forward PE. The chart is showing the S&P 500's forward PE. And then without those stocks, it goes from 19.2 to 16.7. So the whole market is not overvalued.
But wait a minute. In 2013, this line was at 0, meaning there was no difference in price to earnings ratio of the mega cap. And there should have been, right? The market was wrong. Apple was way too cheap. Remember the back out the cash thing? Remember that?
So this
remember
is
that
2013.
meme?
Yeah.
You back out the cash Apple. Well, guess what? It was right. Apple. So these companies should trade at a premium. The weird thing is they're also the biggest companies.
But it's also 2.5 times.
It's a lot.
The PE difference, it's 2.5 times that of the rest of the market. That's the part that I think we've lost our and because these companies are working on AI, like this is what we're saying. I don't know, gentlemen, thoughts.
Yeah, I'll go first. I mean,
Short or long from these levels. Go.
I mean, I'm more of a hold guy, so I think it's it's always possible something can go wrong in the next couple of days, or maybe even just like the sentiment goes south. I mean, earnings from half of these companies are going to be out, next week, so they could make some hiccup.
Not great so far.
It's not great so far. I mean, in terms of like, if we're talking about beat rates relative to analysts, it's like all that stuff is positive so far.
Yeah.
So whatever the expectations are, it's like it's quite possible that they beat those expectations, but it's all going to come down to guidance, right? You're always
Netflix beat the stock fell 10% anyway.
Yeah.
Probably because it just doubled.
Now it's only up 55% year to date. Sam, let me ask you a
Right,
question.
exactly.
We're gaps guys here, right? We always have been.
Sure.
So the Nvidia gap that sits at 320 when they guided from like 7 billion to 11 and the stock gapped up 25%. When does that get filled? First quarter of 2024?
I mean,
do you know how far away that is?
That gap will get filled.
So the thing,
Mark my words.
The thing about the AI is it's like there's so many parallels to every other sort of bubbly tech innovation development that's come out that it's very easy to say, this is like blockchain, 3D printing, the internet in the 90s and all this kind of stuff. But it's also being fueled by big names like, well, I hate to say BlackRock, but like BlackRock, just put out their mid-year report, and a huge part of what why they were bullish on big tech names was because of AI, and they were saying that they had this roundtable a couple of weeks ago that I went to, and I was asking them exactly this. It's like the valuations are crazy on some of these stocks. Is it possible that the price has gotten ahead of the story? And one of the things that they were saying is, well, the difference is there's actual orders for this technology. It's not like companies are exploring how to put blockchain into your workflows.
Yeah.
People are already implementing AI into their workflows.
Yeah. Jack uses it for all his newsletters.
I do. Yeah, I've been writing everything
I don't
for
even think
years.
he's writing anymore.
I mean, if Apple can make $10 billion or whatever off of the watch and the iPad, the AirPods, how much are they? What are they going to do when they monetize?
Well, that was unbelievable, that stock move yesterday.
Yeah. So here's what happened yesterday. Josh and I were talking on Tuesday about how the stock market influences how companies behave. And I said, with Microsoft gaining $150 billion in market cap in one afternoon, you just know that shit's about to change. And so Apple, 2 days later, announced, actually, and by the way, they've been very coy on this. They've been very, did I use that word right? They've been very quiet on their plans for artificial intelligence. Thank you. Here's a Bloomberg article. Apple shares gained as much as 2.3% after they reported their AI effort. Here it goes. Okay. Apple employees say the company's tool essentially replicates Bard, ChatGPT, and Bing and doesn't include any novel features or technology. Well, stock still went up $40 billion. The system is accessible as a web application, whatever.
Well,
What I want
Apple has no current plans to release it to consumers.
Doesn't matter. $40 billion. So what I want to ask you is this. Is text-based AI going to just be something that everybody has, like the web browser, where there's Chrome and Safari and Internet Explorer and whatever else? Like, is everybody going to have some sort of version of this?
I think if you're in a business where there's a lot of communications involved, like a lot of inter-office emails and slide decks that you have to, put together for, VP or whatever, I think this is going to be huge. Because it's like, how much time...
And you're happy to pay for it.
You're happy to pay for it because it's time well spent rather than having someone who gets paid, $600,000.
Has anybody seen Bloomberg GPT in the wild? Has anybody actually used it or seen it? No?
No. They have a Bloomberg GPT?
They announced it like a month ago. I think in partnership with Microsoft or OpenAI, Bloomberg GPT. It's the first finance-driven large language model.
No, but for real,
I haven't seen it, but I have seen. We've all seen ChatGPT and we've all seen the output.
Magic.
And yeah, it's magic. People who are usually sort of skeptical and snark about this kind of stuff are taking screen grabs based off of prompts that they put up, and then they tweet it because it's hilarious. It's amazing.
I don't think anybody's dismissive. You might be dismissive of what it's done to the stock market and said too much too soon.
Yeah.
This morning, Google is testing a new tool known internally as Genesis that can write news articles. That has been demoed for the New York Times, the Washington Post, and the Wall Street Journal. So these companies quickly got a re-rating. To Josh's point, probably has been overdone. But is there? I guess there's doubt. Of course, there's doubt. But we could legitimately be talking about unlocking tens of billions of dollars of revenue.
So I feel like people just don't know who's going to win it. Like they're all popping off because it's like Apple could win it or Google could win it, or the one with Meta coming out where I'm not a tech wizard or anything, but basically they are opening up they're selling a commercial version of their whatever it is AI stuff, and Nvidia's up. I don't know how much over the last year, but a lot of what Meta's developing could hurt Nvidia because Nvidia kind of has a monopoly on a lot of their chips that are for AI stuff. Meta could change that. So there's a new development every day, or OpenAI was the thing up until 3 months ago. Now there's 7 ChatGPT. So it's all of them pop off, one of them wins, and then the rest of them crash at some point.
That's like how the .com bubble happened, right? Okay, in hindsight, we know that the internet was extremely special and search engines and all this stuff was great. But back then, it was AOL search and Alta Vista and Prodigy, and those were massive companies back then. And most of those names don't exist. And today it's stuff like Google and Facebook and all these other names that came after the bubble burst.
Is there any chance, is there a reasonable chance that the winners in this space are any companies outside of the top 6? I'm assuming that Tesla's not going to win ChatGPT.
The winner of the company that benefits the most from AI becoming a widespread technology?
The company that wins AI, and maybe there's multiple winners, but is it going to be anybody outside of Apple, Google, Microsoft?
I mean, it could be that a winner is someone who just implements the best, like a company that doesn't develop AI but finds a way to become 5 times more efficient with AI and then takes market cap. I don't know, somebody like Stripe, or just a random company. Airbnb might be able to better price stuff. I don't know, but there could.
I actually think every vertical will have its own AI mini champion. We talked about Schrodinger on the show. This is the drug discovery AI play. I bought it at like 20, sold it at 25. It's 50 now because I'm a guru. But they are like the leading platform for other pharmaceutical companies to rent out that platform to perform their own AI. The other thing they're doing is they're providing the technology for free and partnering with companies, taking stock in those companies that are trying to do drug discovery with AI. Like they seem to be at the center, SDGER is the ticker. They seem to be at the center of the universe for pharmaceutical related AI. It's easy for me to picture every sector having like its AI play, so to speak, because it's so early. I don't know if that means for like a stock that's going to work over 10 years, but like you're going to see IPOs now coming out where companies are going to be like, oh, we're the AI for retailers. Like every retailer uses our AI platform to figure out when they need to restock. And then you'll see like a human resources AI like, oh, we're going to track all your employees and then ServiceNow will buy it. Like there's going to be like, I think smaller AI plays, but
or what if it's just Google and Microsoft?
Well, I feel like they'll win the biggest because they'll address the most users.
They can also start buying up.
Exactly.
That's what I'm saying.
I think that's what it is.
And whoever starts to win, Google's like, come over here.
I think that's right. Like like businesses like Facebook didn't create Instagram; they acquired Instagram, right?
Yeah.
Google, Alphabet didn't create YouTube; they acquired YouTube. So I think
that's exactly what's going to happen this time.
Yeah, I mean, how often do companies actually come up with anything on their own? Like even like in the biotech drug business, it's like Pfizer, Merck, all these big companies. They acquire drugs that are in certain stages of discovery, and they're responsible for the marketing.
Before any of these companies could get to a $10 billion market cap, they're going to get bought. Besides our OpenAI.
Yeah, I think that's possible. Yeah, it's going to be I would speculate it would be like these small companies that aren't public yet. So just these acquisitions happen very quietly. Like these companies they're probably, Microsoft is probably going to acquire like 10 companies today that we've never heard of. But like maybe one of those companies ends up becoming responsible for, creating the AI tool that blows all of our minds.
It's also, you get kind of a self-fulfilling cycle of Microsoft announced an AI initiative. Their market cap goes up $40 billion. Then you acquire $20 billion worth of AI startups. It's just like you kind of just created value.
Yeah, that's a really good point. Like them just announcing it is like a value creation event.
Well, AI washing, right? So, like if you don't deliver, you just at least say something, right?
John,
by the way, my newsletter is going to start implementing some AI.
Yes.
So just
Sam
everybody wants to know.
GPT.
Yeah, exactly.
All right, so check out this chart from First Trust. This is great. We're looking at the S&P 500 broken down by decile, and we're looking at, within that bucket, what is the forward PE ratio. And what you'll notice is that by far,
this is crazy. By
far, the most expensive area of the market, just based on what they're expected to earn over the next 12 months, are the stocks 1 through 10. So the 10 mega cap stocks. They're trading at a forward PE of 30.6 times. Once you move from names 11 to 50, again, by market cap, it drops to 18, and it just continues. It basically hovers around 18, and then it drops from 400 to 500. The smallest 100 names are traded at 14 times forward earnings. So the market is giving this bunch, this group, a lot of credit for what they're going to do going forward. And if there is any sort of a hiccup, and there probably will be, these names are going to get smoked.
Yeah. But one thing
I'm thinking of Nvidia specifically.
Sure. Well, yeah. I mean, Nvidia is far more of a pure play than a lot of these other gigantic companies here. But how can you really sort of decompose how much of this valuation premium is due to AI versus just the rest of the business, the expectations for the rest of the business?
Well, just if you look at where they've traded historically versus what they did this year, like there's a lot of expansion going on.
Yeah, but. I don't know. So I've been like sort of like changing my thinking a little bit about how to think about some of these bigger companies. Like you guys read my blog about how it's like, oh, this is not actually 5 companies, but it's a conglomerate of like 50 companies. These companies just completely own all of our time. Like where half of our computers is running off of the hardware of one of these companies.
Yeah.
This whole show is going to be streaming on YouTube, which is owned by Alphabet, right? This whole I don't know what platform you guys are using for any of this stuff, but it's like it's all sitting on Azure or AWS or Google Cloud.
It's so true. Like we were with a smaller provider for the podcasts, 2 different ones. Now we've consolidated the whole thing to Megaphone, which is Spotify. So that's
which will eventually be Google,
right? Which eventually will right. The biggest listenership for this show, most podcasts, is Apple.
Yep.
I would imagine that a lot of the editing stuff, technology is Adobe, which is maybe not in the top 10, but it's in the top 20. So it's just like you just go down the list and you realize, oh, there's a reason these companies are so dominant in the index, because that's mirroring how dominant they are in our lives.
And it could be that the prospect for earnings might not be, sort of Nvidia-esque or, small cap growth tech-esque, but there could be a higher confidence that these companies actually deliver on those forward earnings.
What if we're talking about this in 10 years? These companies are so impenetrable. And I wrote this like years ago as one of the many reasons why the valuation of the stock market keeps rising. Well, the biggest stocks, their moat keeps getting wider and wider and wider. And don't those deserve a premium?
Yeah, I think that's a huge part of the story.
Like back in the day, there was concentration in the stock market. That's not a new thing. But when it was AT&T or General Motors, that didn't dominate your 80% of your life. My entire life and all of our lives are with these few companies.
Yeah, and with all the indexing and all the stuff that's going on, you can just buy a portfolio of all these things, right? And so if you decide that you hate Apple one day, you're going to buy something, the next day that runs off of Microsoft software or whatever. So it's like you're going to switch from one thing.
The value guys hate this so much when investing becomes this intuitive, where it's like, what are the best performing stocks of 2023?
Buy them.
Oh, Apple, Microsoft, Amazon, all the best companies that they hate that intuitiveness so much because it's not clever, and an idiot or a child or a growth investor, which I think they look at all as the same, could just outperform. So they hate that. The other thing they hate is like if an alien landed on Earth right now and you were like, and you explained valuation, and then you said and they said, well, what's like a very highly valued, what's an overvalued company relative to the rest of the market? And you're like, oh, Apple. And they're like, what's Apple? And you explain, oh, just like the company that gets 50% profit margins on everything and has the biggest installed user base and blah. They're like, oh, well, maybe that should be the most overvalued stock, shouldn't it?
Yeah, and the other thing too, I mean, related to that, right? Like the reason why, value investors might be frustrated, especially, like you said, like at the end of the year, this is a story that everyone's going to be telling, right? But that's the issue with valuations. I think it's one of the charts that we're going to talk about. But valuations, might tell you if something is expensive or cheap relative to historical PE ratios or whatever. But the historical data tells you that a high valuation or a low valuation doesn't tell you anything about where the stock is going in the next year.
On an individual stock basis.
And even the market.
Yeah, even on the market too. Yeah. So it's like, the very fact that the valuation is high now is sort of a manifestation of this issue of, stocks can get expensive, and so why can't stocks continue to be expensive?
They can. By the way, I am in the camp that valuations do matter. Like what you pay for a business, of course it matters, but it doesn't tell you what happens in the next year, 2 years, 3 years, or even 5 years.
It matters eventually.
It does matter eventually, but what? Like a lot of these valuation metrics, especially like PE ratios, right? Like, so if a company is trading at 30 times earnings, right? This is a very high number, but most of the time you're calculating it based off of either the current year or what's expected to happen in the next year. Well, so that's let's say Apple is trading at 30 times next year's earnings. Well, 30 years from now, is it going to be the same level of earnings? You're probably going to be able to sort of earn all that back in less time.
Well, analysts do that all the time. Like this stock is trading at, maybe it's 30 times earnings today, but it's trading at 22 times 2030 earnings or something.
Right.
So yeah,
earnings. It's a dangerous game though.
Well, of course it is.
If you had played that with previous dominant tech companies, then you would be in Nokia at a level. You'd be in Motorola. People forget that there were maybe not as dominant as Apple and Microsoft are today. There were other tech companies where analysts were playing that game, thinking about 10 years out, not understanding that pretty much everyone in history has gotten disrupted.
Yeah.
Well, how about this?
This is why you got to diversify, man.
There's not a lot of things you could say about valuation that's like conclusive. Like this, but what you can say is trading, buying something for more than 40 times sales, which Nvidia is at, is generally a very bad idea. Like that has not worked out very well. Like Cisco, from 2000 to whatever 2010, it grew at like 20% a year. The business, But it doesn't matter because the market was pricing in like 35% growth.
Right.
And when you fall short of that, you get destroyed.
Yeah, that kind of reminds me of how people used to talk about like the Chinese economy and like what used to characterize a hard landing for Chinese economy. Like when you think about the U.S. economy, a hard landing is recession, right? GDP goes negative and all this stuff. But there was a time when China is growing at 10% per year.
6% was a hard landing.
6% was a hard landing because it's like
now they would do anything for 6%.
Yeah, absolutely, right? Because it's like you plan. You're at 10%, you plan for 9 or 8% growth or some deceleration. You go to 6%, then suddenly you have too much capacity and it's a nightmare.
Jack, you threw this in the doc, Nick Majuli's piece on valuation. This is the hot topic of the year, right? Like everyone basically is like, all right, these companies are great, but these stocks are overvalued. That's pretty much the commentary that I'm reading everywhere. What is this chart saying?
Yeah, basically that like PE ratios on average have been climbing over time, especially since the 80s. But it's one of those things where there was essentially like a monopoly. New York Stock Exchange had a monopoly on broker fees until 1975, which is right around when that started to inflect. So all of a sudden, trading fees come down, and then you have stuff like Robinhood, E-Trade, where more and more people can invest. And then on top of that, companies are getting more global now, where okay, like, yeah, Apple's huge. You could say it's overvalued, but what if they expand more into Latin America where everybody still uses Android phones and WhatsApp and they start using iMessage? It's like as more people can put money in the stock market, that's supply and demand is going to make it go up. Companies get more global. It's going to make their
Schiller. So this is the Schiller PE ratio, which I think is now 30-ish.
Yeah.
So the Schiller PE ratio tries to normalize for the economic cycle. It takes 10 years worth of earnings,
inflation adjusted,
adjust by inflation. So the idea is like, all right, what is the multiple over a longer period of time? And it's very high right now, but you can see on this chart that it's been climbing. So I remember 10 years ago writing blog posts about like maybe we should be paying a higher multiple on earnings. I didn't even get into the commission stuff that you just mentioned. It's a good point. I was talking about like what were the companies that we're comparing these companies to? And they were fucking copper smelters. They were like concrete block companies. Yeah. Like, of course, those shouldn't be 30 times earnings.
They might have been growth industries at some point.
But they never had margins like these companies.
Right. The capital-intensive business.
You know why this chart is completely busted? And again, I'm not saying valuations don't matter. I think they do.
I think you're saying that.
But no.
We're going to edit this so that it looks like you're saying
it. When the Schiller ratio crashed in 2009, at the bottom, after a 57% drop in the stock market, it was barely below the long-term historical average. Yep. Barely. The long-term historical average is like, what, 17 times?
Yeah, so you're waiting for that? Good luck.
And it was below it for like 2 months. Yeah. This is not... So, okay, so the other thing, to Josh's point about these companies, which we've been talking about a lot, the first billion-dollar company, inflation-adjusted, was U.S. Steel.
What year was that?
Like 1901, I think.
It was worth $1 billion in 1901 dollars?
Yeah, you don't remember that?
I missed school that day.
I did a post on this a long time ago, so the numbers are not 100%, they're directionally right. The revenue per employee was like $17,000, again, inflation adjusted. Facebook's revenue per employee was like $4 million. Like, these are not apples to apples. They should not be valued the same, and they're not.
Yeah.
People were getting so mad, though, when we were saying like, maybe the Schiller cape should be climbing, like creeping higher every decade.
Yeah.
So another thing about the Schiller PE trending higher too, especially like since like 1980, you also had interest rates falling for 4 decades. So actually Jeremy Grantham, of all people, wrote in one of his notes, I think like 4 or 5 years ago, actually talks about this, where we may actually be in a new regime for evaluations, where it's a mistake to think about the 100-year average for the PE or the CAPE, but like something that's more close to whatever the 15, 20-year average is, because interest rates are so much lower. So the lower interest rates justifying those higher valuations for all those reasons, lower cost of capital and all that stuff.
There's Robert Schiller in Money Magazine in 2012. Things can go for 200 years and then change. I even worry about the 10-year PE. This is his Schiller PE ratio. Even that relationship could break down. It did. I mean, it did.
It did.
Yeah.
So
one more thing I would add is early last year, Goldman Sachs published a study where they had like some wizard statistician like do some analysis here, and it might have been actually, they concluded that
Was it liquidity?
it might have been it might have been lit something, but the takeaway was that while you can calculate an average for the P because there's numbers that you can use to calculate, there's actually very little statistical evidence to suggest that the PE ratio itself is actually mean reverting. Like there's actually a gravitational pull to that average. Like it can drift, for years or, decades, above average or below average.
Right.
But there's nothing that's sort of like gravitational about those long-term averages to suggest.
Who's to say that 15 times is the right number?
Well, that's the thing. It's not physics. It doesn't behave based on rules that govern like atomic structure in the universe.
Well, you know what
It's
else?
People.
These are not. Yes, these are businesses that are publicly traded. It's not as if you're buying a 7-Eleven and guess what? If you pay 20 times, that will have a direct impact on how much you earn versus if you pay 7 times.
Yeah.
That's not what this is.
Yeah.
Can you buy Nvidia at 40 times sales as long as you hit enter, you scream YOLO? Is that the way to do it?
No, that's how it works. And you can probably sell to somebody who's going to pay 80 times sales.
Yeah,
That's
well,
the
that
thing.
guy's really YOLOing.
Well, it's like we were talking about earlier. Can you short these? Like I would say right now, Nvidia is incredibly overvalued, but it's also like these bubbles run a lot longer than they should. Like I remember when I was literally YOLOing SPACs during the COVID bubble, like I would buy them at 10 and sell them at 15. And then like Nikolai Motors went to 100. It was worth more than Ford. And they had a PowerPoint of a truck that never got produced. It's like there's this like idea I have in my head of like people hear about it like basically on Twitter, on the internet, and then you see it, like people start talking about it, and then Jim Cramer talks about it, and then other people talk about it. And it takes like months for that whole cycle. Like people are gonna just be hearing about AI and Nvidia like a month.
You don't want to
now.
short these things like the day they get overvalued.
No, and you can't
Put
short a
a little bit
valuation.
of time.
That's the thing too. It's like with the passage of time, earnings trend higher, right? Like if you're looking at stocks,
And stocks
broadly,
usually go where?
they usually go up
There we
because
go.
earnings usually go up. It makes a lot of sense when you think about stocks going up, when you think about earnings going up.
This isn't satisfying, but the way that I think about markets that feel overvalued, not feel, quantitatively appear overvalued, it's much easier to adjust your expectations, right? And say, okay, I'm paying 28 times. That's probably, my returns are probably going to be lower versus I'm going to time the market based on valuations. Like that is a recipe for disaster.
Can we also point out Nvidia was in a 50% drawdown last year? It was
More.
It was 120. It's 480 now. So things change really quickly. Meta was in a 75% drawdown.
Oh my God. Talk about a round trip.
This
That
chart
sucks.
of Nvidia is ridiculous.
So I sat through that whole drawdown, and
It was 70 almost. It was the worst. It's like
so I had a former hedge fund manager, super successful guy. I know him in real life, texting me while Nvidia was like 150 on the way to 120, and he's just like, "Dude, you have to get out."
Einhorn did that?
No, this is a under the radar guy who used to work at a very, very big fund. He does his own money now, and he's just like politely like, "Dude, you have to sell it and stop talking about it on TV for the love of God."
This feels a whole lot like what Tesla a year or two
Yeah.
ago, or when that
Yeah.
started going nuclear.
Well, Tesla reported this week. I think we're gonna get into that.
Let's talk about earnings.
Well, we have some SAM charts. The earnings recession everyone's talking about is backward looking. Throw this up, John. What are we looking at here?
Okay, so
For the listeners, describe.
so
This is a meme.
There's so this is quarterly earnings.
It's a terrible meme.
From, this Hey, maybe
You don't even have Margot Robbie in this.
Unbelievable.
Yeah, so
How is this gonna work?
the first half is Oppenheimer, the second half is
All right.
Margot Robbie. All right, so basically what you're seeing in the middle is the current quarter, right? Q2
Well, this is
2023.
S&P 500 quarterly bottom up earnings
Right.
per
So
share, actuals, and then estimates.
right. So the dark blue is actual, and the second half of it, the striped is forecast based off of analyst projections or whatever.
Okay.
So we're currently in what people are calling the trough of the earnings
This
recession.
quarter that we're seeing the reports of now could be the bottom
right
for the cycle.
This quarter, which by the way ended in June, right?
Yeah.
So this is behind us. So this whole matter of like the earnings recession and really sort of obsessing about how they've been going down for the last couple of quarters. That's a good story if you were talking about this a year ago or a year and a half ago, where you're looking forward to what's going to be an earnings recession.
This is the story in 2022. That's why stock is one of the reasons why stocks fell so much.
It makes a lot of sense. The 2022 sell-off makes a lot of sense when you consider the fact that we're currently having an earnings recession.
But can I say one thing? The peak of earnings was the second quarter of 22.
I couldn't tell you. I think it might have been.
Eye test.
Yeah.
So we're saying that earnings peaked at $56.69 a share for the S&P.
Nice.
And they're troughing at $52.71.
That's not a lot.
Who gives a shit?
It's not a lot.
And
it's
we shaved off $20 trillion worth of stock valuation to discount that?
Yeah.
Well, it could have got worse.
Does that seem like madness to you?
We didn't know. We thought it would get worse.
Yeah,
nobody thought that it was that's all that was going to happen.
There's
Okay,
also,
so it's an overreaction.
And there's also the recession that everyone was forecasting, right?
Oh, it's coming.
And with a historically with a
wait and see.
Historically with a recession, you have an average earnings drawdown of like 30% or something.
Yeah.
And so that's something that would justify a 20-30% sell off.
So Sam, based on your chart, it looks like in the second quarter of 2024, which is 1 year from now, we'll make a record earnings quarterly high. Back above the 22 high.
Yeah, 2024, 2025 is expected to be record levels of earnings, and earnings growth is supposed to return.
I'm wildly bullish on 25.
Oh, 25.
All we need to happen here is no pandemic.
Oppenheimer.
Well, yeah, I mean,
or maybe pandemic. I don't know.
Pandemic was good for a lot.
When's Oppenheimer 2 coming out?
Yeah, Oppenheimer 2. Is the point that stocks lead earnings still, and that relationship really hasn't changed?
I think that's next chart. I don't know if you guys have that.
Let's get into that.
This one from Bespoke actually sort of, you can actually see it.
Is this it?
Yeah. So the dark blue line is the S&P 500 for the last 2 years. And so you can see the bear market in the dark blue as it comes down. This is while the reported earnings in light blue were still on their way up. But, you can see in the second half of 2022 where, the forward 12 months worth of earnings are starting to come down.
This is beautiful. So the market peaked before earnings did and it bottomed before earnings
What happened
did.
in
Stocks lead
What happened
earnings.
in October? What happened in October of last year? The stocks bottomed. There was no sign based on this that earnings were finished falling.
Yeah.
What happened?
So, I was trying to sort of figure out what that was really all about. And
Which part?
The bottoming, like when people start.
Look, earnings estimates are still coming down for 6 months.
GPT was announced in November 2022.
There
you go.
I think the AI thing. I think that's part of it. It gave people a new narrative anyway.
So nobody was really talking about it until January. It's hard for that to be plausible, but it would be funny if we would look back in 5 years and everyone just agrees. ChatGPT came out on November 30th, 22. Yeah. Stocks front ran that by 6 weeks and never went down.
That whole lineup. That's AI. That's AI.
I agree with that.
Reports.
You also have 5 or 6 months of cooling inflation, right? So this is what the strategists will tell you, was that this is when people start to really feel good that the inflation battle could be won.
Inflation peaked
June of 22.
Yeah.
And
October,
so October you undercut that low, but then you bounced really quickly.
Yeah, because stocks lead, right? So you don't have to have a pivot at the Fed for stocks to bottom. It's just this expectation that the pivot's going to come in 4, 5, 6 months.
Next chart. What do we got here? Margins have been the big story. Will continue to be the big story. You know who told us that last week? We had Michael Sembalist on the show.
Yeah.
Was that last week?
Yeah.
He said, "I said, where's the puck going? If we're not worried about inflation, what are they gonna be worried about next?" He said, margins.
Yeah, you got to figure this out because the fluctuations in margins determines whether or not your earnings will be amplified by sales growth or sales.
Okay, so this is margin expectations have fallen. Record margins are no longer penciled in by analysts. This is showing us S&P 500 quarterly net margins ex financials. And the yellow is estimates.
Sam, inflation is cooling off. These companies aren't lowering their prices, so can't that be a reason for margin expansion?
It's certainly possible, but another big thing here. Well, another big thing is, I think that's exactly it. That's exactly it, right?
They'll lower their prices if they need to clear inventory.
They'll lower their prices if they need to clear inventory. They'll lower their prices if if supply chains are so fixed and the excess demand in the economy has been sort of exhausted that they now have to compete for business, then you start lowering prices. But for the most part, companies are doing pretty well in terms of sales.
Do airlines who are competing very difficult look like they're lowering prices? Although actually,
aren't prices already sort of in kind of a
yeah,
deflation?
a little bit. Although, well, don't need to go there.
I like this chart. I sent this to you and Ben. The next one, earnings recover faster than they fall. This is from Savita.
Yeah, this is from Savita.
I sent this to you and Ben on Shadow.
Wait, so this is stairs down, elevator up?
Elevator up, yeah. So what happens here, and so Savita explains this, is that historically what happens is during the downturns, you make cuts, right? You sell buildings, you lay off some employees, and you bring
Pay
in
severance.
Yeah, you pay severance, and you
write down inventory.
You have a much leaner operation, right? And so when the sales start to recover, a lot of your fixed costs are much lower than they were, during the previous years. So a little bit of sales growth goes a long way in terms of earnings growth. And this is actually something that Mike Wilson at Morgan Stanley has been talking about for a little while. So everyone knows Mike Wilson as this bearish guy who's was bearish last year, is bearish
They
this
think
year.
he's a perma bear, but he's a little
not.
bit more
He's
thoughtful.
not.
than
He's
that.
he's been very bearish.
He's way more thoughtful. And it's like when you start to read, page 2 or 3 of what
Read.
We don't have to, is it available as a meme?
ChatGPT can do
Right.
that for us.
But that's the thing, though. He does talk about what he expects to be like a pretty aggressive recovery in earnings growth in 2024 and 2025. So he's probably on the low end of earnings expectations for those years, but he does expect a sharp rebound in earnings growth because of all these things that he thinks is actually going to be a headwind right now, right? And it's this phenomenon called operating leverage, right? The degree to which...
Next chart, John.
It's this degree to which a change in sales translates into a change
Bottom
in
line.
earnings, right? So on the way down, and so this is a big part of why we have this earnings recession. It's like sales are kind of weak, but because of the nature of the fixed costs, a small decline in sales leads to a large decline in earnings. Meanwhile, while all of this is happening, companies are sort of realigning, right? There have been some layoffs. There is new equipment coming in. Companies are sort of streamlining their business. People are, you get rid of the office and have people work from home. So the cost structures are a lot leaner. So you have a little bit of sales recovery translating into a whole lot of earnings growth.
You just said leaner. This is operating leverage.
Right.
You're 315. You go down to 200 pounds, you lose all the fat, then you go back up to 230, and it's all muscle. That's operating leverage.
Yeah, exactly.
What's the next chart? Is this Wilson also?
Yeah, so this is So this is just sort of like laying out the earnings expectations for 2024 and 2025. So in the middle, you'll see these are Wilson's forecasts. So you can see the bearish story over here for 2023. He expects a huge decline. He thinks it's not completely appreciated how much earnings will fall in 2023. We're going to find out if he's right about
I
that.
think he's going to change his mind.
I agree.
Yeah, I mean, but his 2024 and 2025 look pretty good here.
When he flips neutral from bearish, that's
You gotta
when you
sell.
buy Nvidia. I don't give a shit what price it's trading at. Just for the day. That's it.
But the point here being that the most conservative strategist on Wall
He
Street
still sees earnings growth.
still
for
sees
next
earnings
year.
growth for next year.
John, can we skip
Okay.
2 charts because we spoke about the valuation? We did the next one. All right, so we mentioned this chart of showing the next 12 months PE based on the bucket of how big the stock is. The biggest stocks are much more rich than the smaller stocks. This is manifesting itself in returns this year. 2022 value stocks kicked ass. This chart comes from OSAM, and it's their value composite. And the strongest decile of stocks that would be most attractive on the value factor are down 5% this year. The stocks that rank lowest based on the value factor, in other words, stocks that are trading
I was gonna
rich.
say the value managers had one good year in 10.
Those
That
stocks
was last year, it's over.
Those stocks are kicking ass. So
Yeah.
it's been not just a challenging year for value managers, but for any stock pickers. Because if you're not equal weight Apple or Nvidia, and how can you be? You can't be overweight. What
What
are
a
you gonna
nightmare.
have? 20% of your portfolio in Apple?
Well,
you imagine
it's funny
paying-
you say that. Berkshire Hathaway's market cap is now 25% Apple, and its stock portfolio is 50% Apple.
Unbelievable.
So they don't give a shit.
So them aside, because
That's the
they don't
biggest
have
YOLO they've ever pulled.
Yeah.
there's I don't know what sort of constraints are on mutual fund managers, but you at a certain point, you just can't be overweight these names.
Let's
Yeah,
go-
I think you're right. I think you're right about that, right? Because there's probably something in the policy statements or whatever where they said, we won't let a certain
Right.
name receipt.
Right.
Go
Yeah, what if it
above
goes like
10%
2 more years and
concentration.
keeps going, and then you try to go value and you underperform by like 20% over the next 2 years?
It's honestly, I don't envy
It's brutal.
the person in that position that
brutal.
has to make that decision. Like, do I buy the stock that just doubled this year in the size that it's in the index?
And regardless
just to keep up.
Regardless of the performance, right? You're paying someone a fee, and their best idea is Apple.
Yeah,
like,
right.
I know, but everyone knows about Apple.
It's hard.
Is that, you
Yeah.
just quote
It's
billions right there?
Did I?
That wasn't
Oh
Billions
yeah, that
quote.
was
That
wasn't
wasn't
Billions. That was
Billions
like a
quote.
first season thing.
Josh
Yeah,
wrote
I
that.
like Apple.
I think I wrote that line. Actually, wait a minute.
He nailed it, by the way.
He did.
So let's move on. Goldman Sachs chief economist Jan Hatzius, quote, "We are cutting our probability that a U.S. recession will start in the next 12 months to 20% from 25%. And that's just science,
Boy,
guys.
credit to them. They've been below consensus.
Yeah, no, good for I agree.
And they've been below 50%.
Here, quote,
They've
this
always,
is Jan. The recent data have reinforced our confidence that bringing inflation down to an acceptable level will not require a recession. Like, you could do this without one.
So soft.
It's whack. What is this chart saying? This is just like moments that happened this year? Is it terribly important?
No.
I think,
No.
Well, I didn't put this in.
Oh, this is their probabilities
Yes.
evolving.
No, but I'm saying
Yeah, relative to the red, which
Yeah.
is the consensus.
yeah,
on the
they've
street.
been more optimistic than
When
than
was the consensus most certain there was going to be a recession? October of 22?
At literally at the bottom.
Perfect. Bottom for stocks.
I mean, is
Perfect.
that just because everybody thought that when interest rates went up, it was going to, like, that just has to cause a recession? That was just the baseline.
Well, also the
thought process.
pace in which they were rising, too.
Yeah.
And we didn't even know they were going to start doing 75 basis point hikes.
Is it
Yeah.
weird now that the S&P 500 is trading higher than it was 2 years ago when interest rates were
It's the
zero?
weirdest thing
Super
ever.
weird.
Yeah. Okay. Again, I'm only
Employ-
26, so
Super
this is
weird.
kind of my first time
Yeah.
doing this whole
Super
thing.
weird.
Like I feel like I've been speed running stuff.
Dude,
since
no-
COVID.
Unemployment's lower.
By the way, you're learning nothing
personal
from this
consumption's
year.
higher.
Trust me,
Yeah,
I
this is
know.
all garbage. By the way,
It's outlier.
nobody got this right. Like, nobody got this right.
I mean,
You should forget this year ever happened. Like,
I've been-
because
yeah,
it's
that's-
gonna-
I've heard it
it's
for the
gonna
last 4
mess-
years,
It's
though.
going to mess you
But
up.
here, that's just like
I think
2020.
you could argue that Goldman probably got this right, because they were always below 50%
Yeah,
likelihood.
but nobody. But I'm just saying the stock market just coupled the soft landing into like 2% within all time highs. Nobody thought that.
I think there were some economists at some boutique firms who. were
Oh,
sort of
great.
like-
Fine.
Honestly, we are all getting stupider because of this year by the day.
Here's where it's really going to get dumb. People are going to over-index on what happened this time for
Yeah.
how we combat the next.
Yes.
Sure,
Oh,
sure.
I guess interest rates don't matter. Like, no.
Yeah.
This is stupid.
Yeah.
It's a COVID-related phenomenon that we're still paying the bills on.
It's all COVID.
Yeah.
All the comps are stupid. Everything's stupid.
And there's a lot of signs that's saying that there's just still a ton of excess demand in the economy, right? I think I have some charts in here too where there's a lot of leading indicators that say that there's still a lot of pent up demand in the economy. So it's possible that we continue to have this economic growth go on longer. I do think it's kind of ironic that it's not until months of job creation and months of economic growth that people finally decide to get more bullish on the economy.
I'm going to quote
course.
one of the leading economists of our day, Elon Musk. Elon Macro, during the Tesla call last night, said, buying a new car is a big decision for the vast majority of people.
Mm-hmm.
So anytime in this economic uncertainty, people generally pause on new car buying, at least to see what happens.
Huh?
And then, I don't know. He's from South Africa. He's a genius. Don't worry what it says. Oh, here's what he said. So when interest rates rise dramatically, we actually have to reduce the price of the car because interest payments increase the price of the car. True. Checks out. So, and this is at least up until recently, I think the sharpest interest rate rise in history. So we have to do something about that. And so if someone's got a crystal ball for the global economy, I'd really appreciate it. Can we borrow that crystal ball? So, I mean, one day it seems like the world economy is falling apart, and the next, everything's fine. I don't know what the hell is going on, to be totally frank. I wish I did. End quote.
Same.
It's very honest.
You know
Yeah,
what? I was
same.
about to say.
What is going on?
That's a lot better than a CEO coming out and saying, we're going to have 5% growth. For the
Yeah,
next
no
3
shit. I
years.
totally agree.
Yeah.
That's what he should say. Because if he's saying, oh, here's how the economy's going to finish the year, I'm not so sure I would trust that.
Yeah.
So, and he's He's Elon. So
Yeah.
it's
That's the great thing about earnings calls too, by the way, right? It's just blunt, straightforward.
from him.
off-
Yeah.
He's very
Not
entertaining.
from everyone.
There's no compliance officer stopping you from.
Sam,
saying
last
what you
week we were talking about the chart that you had in your note the other day about how Wall Street strategists are still bearish on the second half despite being bearish this whole time.
Yeah.
It's remarkable. You write, it's worth noting that the S&P is now above all the year-end targets
Chart on.
Wall Street forecasters had coming into this year. I mean, where are we right now? 4,400? I don't know where we are. Whatever.
Yeah,
We're-
45 plus.
4,500. The most bullish
was Deutsche Bank.
is Deutsche. They're at 4,500. Barclays is the most bearish, 36.75.
Shout out Wells Fargo. Also.
Yeah, shout out to Wells.
So we're getting some capitulation. Credit Suisse is raising. And now you said like 3/4 of them have raised their price targets. Like, should you be allowed to
most.
raise your price target? There should be like when you're. So I do a lot of live betting because I
Should you be allowed to?
Psycho. Hold on. So you can't bet on an NBA game, at least on FanDuel,
In the fourth quarter.
when there's like 4 or 5 minutes left in the game. Like all bet. That's it. Put your pencils down. There should be a pencils down moment for Wall Street strategists. I don't know when that
Mike,
is.
it's July though. Like maybe after Thanksgiving they
You
should
should
stop.
you should get one adjustment. You should maybe one freebie.
I mean,
What do we think?
Some of these guys will adjust their targets like into the fall.
This isn't
with 3
now.
months.
And what do
We
they
need
do?
rules.
They never adjust it away from the direction of the market.
No, they do not. They do not.
They adjust
That's
it
a fact.
toward where the market is already.
I think you just have to publish the last 2 years of like with a line scratched through it, the new one over and over again for the last, I don't know, like 18
Yeah.
months or whatever, showing how many times you changed it, what day you put those out.
First of all,
Just show
here's-
the track record.
First of all, here's Credit Suisse, which I didn't even know existed anymore. It's nice that they still have an S&P target. We are raising our 2023 S&P 500 price target to 4,700, 3.9% above current levels with modest upside from multiple expansion.
Very helpful.
Also raising our 23-24 estimates to 220, 237 from 215 and 220. All right, so I guess this is the guy's last report, and then
Yeah.
he walks out. He walks out. Is this coming from UBS? I don't even know what's going on there.
I mean, one thing I will say about these strategies and these forecasts and these targets, like if you talk to some of them, sort of, behind the scenes,
Yeah.
not a lot of them like playing this game.
They hate it. They
have
have
no
to.
choice,
They have
though.
to.
But if you look past these targets, a lot of their research is still pretty good, and a lot of them will continue to like their fundamental arguments are still really robust. It's just that they had the wrong multiple on the wrong earnings.
All right, I want to talk about sentiment for a second. Here's my take on sentiment. It is completely worthless unless everyone agrees, which is very rare. I think we can all agree that in 2022, everybody agreed that things were going to get worse.
Yeah.
Were you at our NASDAQ event?
Yeah.
So
You did the survey.
When
Yeah.
was that? December?
It was 100% bearish.
I asked the
Yeah.
crowd how many people
Yeah,
think a
December.
recession is coming, and like almost every hand went up.
Yeah.
How many people think October was actually the bottom? There was like, one guy who was probably trying to be funny put his hand up.
Yep.
Everybody. So really, that was one of the few times that I can remember that everybody was on the right side.
and not answering on the internet, like live in
Everybody
person,
was
looking
on-
at you in the eye.
Everybody
yeah.
was on the same side. So when I say sentiment datas are bullshit, here's what I mean. So the July fund manager survey that Bank of America runs shows what do you think is currently the most traded trade? Cash number one.
This is what they think other people
Right.
are crowded into.
So if
Yeah.
you were to look at this, the Global Fund Manager Survey, cash is the most crowded trade. The least crowded trade is equities. Okay, so you would say, oh wow, people are still bearish. This thing has room to run. Then you look at Sam. You actually put this in one of your pieces. The expectations of higher stock prices. This is a survey from the New York Fed. The mean
that's-
probability that U.S. stock prices will be higher 1 year from now. It's 35%. It's basically as low as it's been in the last decade. And you would conclude from this, okay, we have room to run. Nobody's bullish on the stock market. But then, okay, I'm sorry, one more bearish one. This is from JP Morgan. They ask, are you more likely to increase or decrease equity exposure over the coming days and weeks? And it's super low. Now, this was from June. I'm sure this looks different now. But only 17% were planning to increase their equity exposure, which again was at the very, very lowest
Right.
sign of the reading. Then you'll see something like this. The active managers continuing to add equity exposure. The NAAIM exposure index, I forget what that stands for, is up to 99 from 93 last week. So this is exploding higher, which you would lead you to conclude, everybody's bullish, I should back off. And then finally, if you look at the AAII bull bear spread, which is individual investors, the number of bulls outpaces the number of bears to the highest degree since January 2022 when the market topped. All of this is to say, I just showed you 3 charts that were super bullish, meaning that people were underinvested, and 2 charts that might be flashing, everybody's bullish.
I mean, there's psychological studies on stuff like this where you can ask the exact same question, but just frame it slightly differently, and you'll get a different answer.
Yep.
Yeah.
So unless everybody is super bullish or super bearish, which rarely happens, these are good for blog posts.
Yeah. It's there's also the how do you think other people feel? How do your clients feel? How do you feel?
How do you think?
And what are you actually doing? Yeah. And that'll differ from what you're planning to do.
So hold on, Josh, let me ask you a question. How bullish do you think Sam is right now?
I think Sam is exuberant.
There we go.
I would say.
Write it down.
I don't know. I think not as bullish as he could be. I mean, 1 or 2 more high noons. We'll see what happens. Can we talk about charlatans?
We love charlatans.
I think ChatGPT is going to help us monitor charlatans.
Put Jack's tweet up. First of all, I fucking hate this guy.
Oh, he's the worst.
I think he's the devil.
Yeah,
And I actually think he knows exactly what he's doing. I don't think that any of this is innocent.
Wait, before we get into the charlatan, let me just set the stage for this. Ben Carlson, I'm going to give him credit for this idea. There's 2 types of charlatans. Type 1 is the charlatan who earnestly believes the message that they're putting out. And I don't know if that would be a charlatan, but I almost respect that. Listen, you're wildly wrong, whatever, but it's earnest. It's
go
sincere.
down with the ship.
It's sincere. You believe it. The type 2 charlatan knows that they're...
What's a type 1, without insulting anyone personally, what's a type 1 charlatan?
I would say John Hussman. Is very sincere.
Yeah, I think he believes what he's saying.
Thoughtful. He's not trying to pull the wool over anybody's eyes.
Right. His research is very robust.
It's foundational.
It's telling him, exactly.
It's not...
Michael Saylor, 100%.
100%.
Yeah.
100%. He believes
favorite.
it. He believes it. This guy is a type 2. So Rich Dad, Poor Dad now turned full psycho, and they know what they're doing.
He said, I think a year ago, that the best investment you can make was cans of tuna. That's a direct quote.
Right. You're gonna need to feed yourself as this whole world comes undone.
Does he know what an investment means?
I've never read his book.
Oh, wait.
I don't plan on it.
It's you're conflicted. I don't know exactly what his deal is, but you're conflicted by your financial.
Let me set the tweet up.
Right?
So he's been calling for the end of the world now, pretty vociferously.
That's the thing. You could be bearish, but this guy is calling for the end of the world.
Okay, so now he's saying July 17th with the S&P up 25% and the NASDAQ up 50. I do not play the stock or bond markets. As an entrepreneur, I like my hands on control too much. Yet too many signs point to a severe stock market crash. If your future depends on stocks and bonds, please be careful. Possibly ask for professional advice. I'm afraid a depression is coming. Okay, maybe everyone will laugh at me for laughing at this in 6 months. We'll see what happens.
The professional advice part is pretty good.
Yeah.
Do you think maybe he just means people are going to be depressed in the future?
Yeah, that's what it is.
I like how he doesn't use full
Jack,
sentences
read your tweet in your voice.
Top rope.
Read your quote tweet in your voice. Go.
Okay. The irony that the guy who wrote one of the most highly recommended personal finance books ever is a doomer who routinely gives 20 IQ financial advice is almost too funny to be real life.
It's true,
and yet,
though.
Here we are.
There we are.
Guess what? His book was good. It's I think it might be...
Is it good? Is it actually a good book?
Can I confess I never read it?
Same. Never go into it.
16-year-old Michael thinks it's good. It was the first book on personal finance that I've ever read.
What was the gist of Rich Dad, Poor Dad, in one sentence?
I don't remember.
Must be
no, here's what I think it is. Invest in yourself. Get smarter.
I don't think
put
that's
money.
What it was about.
Okay,
I think it's about the habits of dads who are wealthy contrasted with the habits of dads
it was about
who are
compound
poor.
interest and tuna cans.
No, it was about it was about save it. I never read it, but
interest.
I have an idea. Well, now he's not doing that. Now he's telling people the world's going to end. Therefore, buy my whatever the he's selling.
One more thing about charlatans that in this day and age where we've got ChatGPT, people can look shit up. How do these people still have platforms?
Because they're very convincing when they speak, and people don't care what they used to think.
Yeah,
or used to say.
People don't care what they used to say, and people don't care, I think people don't have time to vet people and vet information.
No, I
vet
think that has
trends.
nothing to do with it. They don't care. They want the message. I'm telling guys, I know this from personal experience. I went to a gold conference in Vancouver 10 years ago, 12 years ago. I was invited to speak. It's a long story. I had no business being there, but it was great. Really nice people. And the whole gist of the event was you have to invest in these Canadian junior mining stocks because the world is going to come to an end. And Doug Casey, this is like his event. He's a very nice man, comes up to me, says hello, introduces himself. Then he goes on stage and he's telling people farmland or you're fucked, like for your family. You looked around the audience, they want that. That's what they pay him for, to say back to them. People, as they get older, want the confirmation that, oh no, it's not just me that's getting left behind. The whole world's gone crazy. And actually, it's probably coming to an end. They know that it's not true. They want someone to say it to them anyway. And that is the domain of the type 2 charlatan. The type 2 charlatan is willing to be paid for delivering that message. And they don't invest that way with their own money. And they don't start companies because they think the world's going to come to an end. It's very obvious, but that's the message that they're selling, and it's very effective.
I think one thing that does get lost in economics a lot and finance and rational behavior is that this whole economy is built on the actions of people who can be pretty
fucking
irrational.
nuts.
Yeah. Religious people.
There's two episodes ago on Righteous Gemstones on HBO. So they're a family of evangelical mega church preachers, and it's hilarious. It's a comedy, but they did a flashback episode to 1999, and the preacher is selling like survival pouches to his flock on a TV commercial, and then the world doesn't end. It's like Y2K. And then Y2K ends up being nothing, and they're all protesting outside the church. Hey, you sold me all this fucking oatmeal, like buckets of survival oatmeal, and I didn't eat any of this shit. And they have to talk their way out of it. But it's like people have always been willing to pay for that message.
Yeah.
So in the economy, it's no different. What is this chart, Mike?
So Michael Sembelis, just as naming names.
Put this up.
Basically,
I like this.
the reason why I get mad about not people being bearish, because I've been bearish plenty of times, but people that are just like depression level bearish, like rich dad, poor dad, you are preying on the financially illiterate, and it's just fucked up. So anyway, Michael Sembelis, who was amazing last week on the show, made a chart like what happened if you shifted $1 from equities to bonds at the time of the Armageddonist comment. And the track record's not great. So
we don't have to say the names that are on here. Everybody knows.
We know who they are.
Everyone knows the names.
And it's not about being wrong. That's fine. It's just like these people are just relentless. And it's not even at some point I said that Hussman does legitimate work. These people, it's a personality disorder.
Well, I mean, some of these people are associated with having said negative things going into the financial crisis, right? So like, you get one really amazing bad call
and you just want to repeat it.
Yeah, your whole career is made. I mean, like you're already set for retirement, so why change?
But then there's a psychological component to that where like you got famous for being bearish in 2007. And because you called the financial crisis.
Your fans want you to be bearish.
So now you're looking for your next hit song, because you want to get back on Bloomberg TV and CNBC, and you want people talking about you on Twitter. So you're always looking for your next hit song, and it might never come.
And it's always, they always double down. It's never like, this is going to be not as bad as 08. Like, it's always like, this is going to make 08 look like.
It's going to make 08 look like a walk in the park.
I remember Kyle Bass was one of the ones who was like one of the big 08 home runs. And then he basically had a TV tour for the next like 12 years.
Yeah,
He tried to short like 10 different currencies. None of them hit. Like he thought Japan, China, all these countries were going to collapse.
Yeah.
None of them hit it. But
the risk reward is asymmetric. You only need to be right once.
Yeah, exactly. Yeah. And then you can always raise a new fund and raise
it's like when you see like BR betting or whatever on Twitter or TikTok or whatever, like printing out like these huge parlay wins that make you a fortune, based off of a $2 bet or something. It's like that stuff is like really interesting. But the professional gamblers who might actually be making money they don't bet like that, right?
Put up these Home Alone faces.
This is great.
I was this kid.
I don't know. So StockTwits did this did this meme, I guess. They showed 6 months ago, the headline is how to use the 2023 market crash to get rich. And it's this kid with his hand on his head. And then 5 months ago,
it's like a 25-year-old.
So a month later, why you'll regret buying stocks in 2023, and it's the hand is still on his head, but it's in a different position. Then
the hand's on his mouth.
3 months ago, the Fed just crashed the market, and he's got his hand on it's in a fist on his cheek. And then just yesterday, how to get rich in the 2023 bull
Josh,
market.
you know this guy. Y'all were co-stars in the same movie. Are you aware of that?
Was he in what movie was I in? The Netflix documentary?
Yeah.
Well, right. Oh, he was in This Is Not Financial Advice.
Who is this?
Who is this?
Graham something. He was
Graham
in it
Stephen.
too. He also talked to the Dogecoin. Or you didn't talk to the Dogecoin guy, but he talked to the
All
Dogecoin
right, so here's
guy.
the difference. He's not registered, like giving
Right.
actual financial
no,
advice.
he is a YouTuber.
He's doing entertainment.
I'm just saying you're
All right,
co-stars. You
that's-
guys were listed in credits together.
Got it. Okay. Do you know this? You know this kid?
Not at all.
Okay. He's
I think he's like 35, actually. Like, I think he's like got 9 years on me.
so he's got hundreds of thousands of views per video, and I guess he's good at making the videos.
What's the Mr. Beastification of YouTube? You
Yeah.
put a
By the way,
crazy
I don't know
thumbnail
this
idea.
person.
Yeah,
and
looks
I'm not-
fantastic thumbnail image. You
This-
know, it just
so when I
draws
say
your
charlatan,
attention.
I mean like professionals.
Yeah.
Like I'm not talking about this kid.
Yeah.
Professionals or charlatans.
Chamath.
Duncan, are we the
favorite.
only
It's my favorite
Duncan?
one.
Are we the only people on YouTube who like are not haven't like just bitten the bullet and said, okay, let's just write crash on every thumbnail?
Let's just do
No,
it.
I can
there's,
draw
there's
you
good
Just
thumbnails.
do it
people.
already.
There's good people
I can
out
do little
there.
crayon thumbnails for you guys.
Honestly, I'm fucking
More.
tired. Just I want from now on, John, write this down. Every thumbnail, I need fire. Is this fire? Literal
flame,
fire?
fire.
That is
Yeah,
George
you-
Washington
I
on
need
fire.
I need like $100 bills on fire in every thumbnail from now on.
I like this Federal
Let's
Reserve
just
Photoshop
cheat
tweet.
codes
I
at
was
the
even-
end
yeah, it's
where
great.
I could start selling Magic Spoon.
there was
Like, can we just get to?
There
That's
was
all
a-
I want to do.
There was an internal editorial strategy deck that got leaked from BuzzFeed a couple of years ago.
Oh,
Talking
boy.
about how to like draw attention to
Yeah, how to impulse idiots on the internet.
Yeah, right. So there's
Right.
like, well, skipping all the language stuff, but like if you do like add some more reds and oranges and bring up the concentration
that?
and the brilliance in it, like it'll draw the attention of
All right,
people's eyeballs.
let's talk about Twitter. This shit is crazy. So somebody tweeted you should get a consortium together who understands your vision for this website. Talking to Elon. So Elon responded, we're still negative cash flow due to 50% drop in advertising revenue, plus heavy debt
I love
load.
this guy.
Need to reach positive cash. Okay. So Bloomberg did an article. This is wild. Advertiser spending dropped 89% to $7.6 million over a 2-month period earlier this year. These are estimates, of course. The top 10 advertisers spent $71 million from September to October before Elon bought the company. So what happens here? Does it go
Somebody
bankrupt?
told me that all of the ads are now Cheech and Chong.
all of
it's
them.
a lot.
They
All
are.
of
They
them.
buy the
It's
whole
incredible.
advertising.
It is insane.
every
Anytime I have a
line.
tweet blow up, it's just these like weed gummies over and
No,
over
no,
and over again.
I blocked it. I blocked that account.
I actually,
It'll come
I
back.
keep clicking. I wanted to amplify. I
But
love it. I
wait,
want to see more of them.
Is that
Twitter.
actually
Twitter
true?
right now.
Did
Dude.
Cheech and Chong take over the
It
entire?
has to be at least like a $50 million.
So Twitter is
ad thing.
basically a drug dealing website now.
It always
Is that
has
all
been.
that's going on?
But
it always
yeah.
has been.
It's every. I've got a Bank of America promote tweet. I mean, it's
Yeah,
just.
I've seen them too. Yeah, on my
Also,
account.
I'm guessing it's
Who's
a she.
she?
This anonymous Sophie wrote a very detailed Substack about actually how they should restructure the debt.
Is she wearing goggles on her head? Is that steampunk?
I'm
into
think
that.
it's like an AI generated Margot
Oh, I
Robbie
see.
picture.
Okay.
But I love the Anon accounts that actually have ridiculously well written content.
So what
Those
happened?
blog posts.
What happens to Twitter? Like literally, does he just keep
Nothing.
selling
It'll
shares
stick
to?
with- you know, there's still a Friendster.
No. But I'm saying
Yeah.
they're not. They can't cover. I don't know this. I'm saying, what happens if they can't cover their debt, like their interest? Does Elon just keep selling shares? What literally
I
happens?
hope he re-IPOs it. That's
Here's
my
what
favorite
happens.
take.
Morgan
Probably
Stanley.
$10 billion.
like it.
Morgan Stanley is going to actually have to take the keys to this thing. They are.
Well, it's them and a few other banks. I think
But
they
they're the
lent
lead
13
creditor.
They're the biggest.
They
Yeah.
lent 13
Creditor.
billion.
And they couldn't offload it. Nobody would take the debt.
No,
13
nobody
billion.
wants this debt. Morgan Stanley is going to have to like a credit committee. They're going to have to like take the keys to
Sam,
this
do you know what the
Well,
debt
the
is
color
trading
scheme
at?
matches. They're already
What's
blue.
that?
They can
No,
just
I have
own
no
it.
idea.
What do you think? What's the debt trading at? 30 cents on the dollar?
Not great.
So now Twitter's paying people to tweet.
What is this
So
shit?
Jason tweeted, what WTF Twitter, you're paying me $50,000 a year to tweet.
It was really like
Jason
$18,000
Calacanis.
a year. That was over like a 4-month period too. His
Wait,
math was bad.
is he just saying that Elon is giving him a salary?
It's not,
or
no, no,
he's-
no, 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 no. Is this a joke or not? I've seen other people tweet
No,
this.
this is real.
I think, yeah, this is
These
real.
are real payouts.
This is
I
real.
didn't get one,
Yeah.
which is bullshit.
Wait, can
It's ad revenue sharing from ads shown on
wait,
YouTube.
is-
But
Money
you have
get paid to
I-
tweet?
I think you have to be on Twitter Blue, or
You have to have had 5 million impressions a month over the last 3. I
Right.
would like to point out my Alphabet thread got 30 million impressions alone. I haven't gotten a cent from that. It's
Now, who
ridiculous.
pays you? Does Cheech and Chong make a direct deposit?
Musk Venmos you.
Musk
Yeah.
Venmos
Wait,
you?
is this Web 3?
This is Web 4. We're past that.
But I mean, so it sounds like the payouts are based off of engagement. So this is going to invite all kinds of insane behavior.
Oh no, it's
Oh, sorry. I want to play this real quick. Apropos of our Twitter conversation.
I want to thank the motherfucking haters, because you really make me get up in the morning and be the best I can be. All the naysayers, all the people that wanted to end my career, now I'm on a Walk of Fame.
We could edit some of this, right? Lightly.
And that's the motivation. You got to let them haters motivate you. You got to if you want to go in the gym, go on YouTube, see somebody talking shit about you, then go get your reps in. You understand what I'm saying?
So having worked,
If it wasn't for the haters, I definitely wouldn't have pulled this off. I swear to God. I swear to God. Thank you so much. I'm going to give you so much more to hate in the future. Trust me.
And that is, of course, John F. Kennedy. No, that's Ice-T accepting his star on the Hollywood Walk of Fame earlier this summer.
so I've worked at a couple of media companies.
Yeah.
Where there will be a higher up exec looking at the data and saying, well, this kind of content is getting a ton of engagement. This is getting shared. This gets commented on. This has all the clicks. And then the editorial team comes in and looks at it, and you're like, I'm sorry, but that was a mistake that someone wrote that. Or that was from a partner that we didn't even know existed. And it's like, that we cannot have content like this. And so, but you do know that this rage, stuff that's polarizing, stuff that's conspiratorial, and uses a lot of exclamation marks and headlines, we'll get a lot of engagement that shows up in the data.
Yeah.
You know the vaccine targeted Tesla short sellers? Did you know about that?
No, I'm just learning about this.
Yeah.
That's gotta be
all
true.
hate. The whole site is based on it's based on different groups of people hating each other, and then individual vendettas.
Yeah,
It's the whole site.
This is. I mean, if they don't already know this model will not work because the advertisers are leaving. There's not going to be any revenue.
There's no
to
new
support.
advertisers coming.
Right, because they don't want
Chong.
to. Because Procter and Gamble
already
doesn't
have
want
Cheech and Chong are
dryer
going to run
sheets.
out of money.
Yeah, advertisers don't want their consumer products or whatever it is they're selling next to conspiracy and hate and
So I
Pictures
wrote
of
this down. I
KKK
said
rallies.
it's almost as if a dying social network populated by the bitterest, saddest, most anonymous losers on earth is also not a great financial investment. It's so weird. I can't believe it's not a gold mine sitting directly beneath an open sewer. It's really amazing. And
it kind of sounds.
it wasn't
like,
always like that. That's not what the site used to be. That's just what it is now.
I mean, it's almost like there's some desperate attempts to try to inflate some kind of metric inside the company with the hopes of finding some.
Yeah, they're finding very obscure metrics and shouting them out.
Yeah, and then putting them on a slide somewhere, and then they'll try to sell it.
All right,
to
I'll give you a
some
stat.
billionaire
Did you know
somewhere.
20% of weekday Twitter is stay-at-home dads yelling at CNBC or poor people explaining monetary policy to each other? Did you know that? I don't know what the other 80%. That's a real.
I'm in the other 80%. I
You're
just
in the
make
other
fun of the. I make fun of the. I make fun of the 20%.
Yeah.
It's a fun.
No,
it's a
it's
fun
just-
role to have.
So
anyway,
yeah, I want to give a shout out to Rich Filoni. That's how you say his last name, Sam?
it's actually
Yeah.
pronounced felony.
Yeah. You know Rick Filoni?
So the Rich just tweeted at me, and tell me if I'm off here.
You're so addicted to Twitter. by
So-
the way. you're the most addicted.
No,
at
I'm
this
not.
table.
Not even close.
You then, Jack.
Are you on it right now too?
I'm on it right now.
Same. I've been on it the whole call.
Are you guys
I'm checking my
DMing each other?
I've been checking my I've been checking my notifications for the last hour.
So here's what I learned watching the Napoleon trailer. I knew that he was a general. Did he also become king?
Emperor.
Emperor.
He made him. There was
Yes, and
What?
then he got,
invented the
I
title
did
for
not pay
himself.
attention in world history.
he
Duncan's
did.
doing-
He did. Then he got sent off to Corsica, and then he came back and like took back over for like 40 days.
They
and they
restored
sent
him.
his ass way further to another island, and then he died.
Elba.
Yeah.
They restored him temporarily. He had loyalists that were like, wait a minute, actually, that was good when Napoleon was.
He also wasn't that short. That was British propaganda. It's a fun fact.
Oh, that's
He was
very fun.
average height for a Frenchman, which
What was
was
that
short,
for a Frenchman back in the day? Like 5'8"?
probably.
We
So-
were, the human
Where are we
species-
going with this? This is
I'm
something
just-
you
I'm-
learn on Twitter?
Saying
Well,
it's propaganda.
Rich Fuller just because I said he was laughing that I said that on the podcast with Ben.
Oh, gotcha. So you're on Threads now, but you're still tweeting.
Yeah, so I thought a week ago that Threads would probably win because I also thought Twitter declined a lot, and then
A lot of people smoke weed while they're drinking.
right. But then I just couldn't stay on Threads, and then I kept getting back on Twitter, and I was like, well, I don't even have Twitter on my phone.
Is
and I
Threads
keep
already
checking it.
dying?
Yeah,
It's real. Like,
it's
you know,
over.
I'm not allowed to post on Threads anymore.
It's going to be gone by the time you're there.
Do you know that? Did I say that to you?
No.
Because my chief compliance officer was like, if anyone's doing Threads, stop. Wait until our archiving software can plug into the API. And
yeah.
so now every time I post a thread, I think Nicole has to print it out and hand it to somebody
Send it
in
to
the
Iron
compliance.
Mountain or
No, it's like a whole procedure now. It's not worth doing, like to archive a thread. So we just all stopped. And I'm like, we got to find a way to do this because it's a land grab right now. You got to be
The problem
influential.
with Threads is that they had their list of influencers from Instagram. They put on there right away. But one, a lot of people on Instagram don't know how to read. That's the first problem. The
Yeah,
influencers
most
on
people.
there are illiterate. And two, those are the people who are posting the most threads. So like, oh yeah, let me just go in here and see what Logan Paul thinks about the economy. Like, I don't give a shit about that. Kim Kardashian is going to write 1,000-word thread posts.
Are you
No.
posting
Yeah,
on
it's like
Are you posting
Instagram
on
without-
Threads?
Yeah. I am just for the sake of.
Why wouldn't you?
I'm,
What's the
I'm
difference?
testing out. I mean, I have
boring.
free time. It's like
Boring.
I'm either going to
It's
post on Threads or just like sit around and like watch. TV
Why not
or
just use
something.
LinkedIn? LinkedIn is a great place to have a Twitter personality. It's insane. Nobody posts anything there.
Your LinkedIn trolling is the
There
best, by the
are
way.
1 billion
Oh my
people
God.
there, 3 times the size of Twitter, and nobody posts.
Oh, wait a minute.
The-
I
the
forgot to ask
comments-
you.
Oh my
I
God.
meant to ask you this, and then 2 weeks passed, and it was too late. I couldn't ask you. It was too late. When you got in trouble, or the dean said something. Can you tell a story?
Yeah, no, it's my favorite story. So,
Do you know about this?
This is a true story, or is this
no,
one of your LinkedIn stories?
No, this is a true
Both.
story from a
Both.
LinkedIn post. Okay,
Okay.
so in October of this past fall, I was really put my foot on the gas on LinkedIn shit posting, and I did one saying I posted this really long thing, personal finance hack. I haven't paid for food in Manhattan in 3 months. It's moving here because I keep going to different hotels around Manhattan and going in, signing off on random people's rooms, getting continental breakfast, coming back for steak dinner. I would take girls on dates to like the nicest hotels in Manhattan, then we would just leave. And like it blew up. LinkedIn, 2 million impressions, screenshot of it on Twitter, like 15 million. Austin Reef, Morning Brew CEO,
see
his
any of
most
this.
popular tweet ever was a screenshot of my LinkedIn post on Twitter. It went nuts. So I get an email from our dean of students like 3 days later. It was like
Somebody sent it to Columbia.
a Columbia alum sent a screenshot of my LinkedIn post to our dean of students
Idiots were outraged.
saying,
Like,
I cannot believe that Columbia is letting students like this in that is destroying the reputation of our institution. And there were people commenting on the post that would have like Wharton MBA or VP at Microsoft or JP Morgan
Oh, you
saying,
really
go f yourself, like this is petty theft. I'm like,
People,
how do you
people
fall for
think
this?
people think when you're on LinkedIn, you're at work.
It's perfect. So
Right.
I ended up having
You
to go.
can't lie.
I ended up emailing the Dean Chaps. And we're like, she's such a homie. She's so cool. But I emailed her back and I was like, she's like, yeah, can you come meet with me to explain this? And I was like, yeah, just, for clarity, in the last week, I've also said that I called Joe Biden and said I wanted more student loan debt because I've got that dog in me. It'll make me grind harder. And I got vaccinated. and I got vaccinated 1,000 times when they were paying people like $100 to do it to make 100K as a side hustle.
Oh my God.
We're gonna save this for later, but it's actually getting late already. I'm just gonna skip to this. This is you on LinkedIn 2 days ago. You told a story about being on the 1 train, the subway,
Oh my
and
God.
there's a mother with 3 small children boarding the car. She has a stroller. She has one strapped to her chest, and then the oldest child, no more than 5, holding her hand. The car is packed. Everyone that was seated was avoiding eye contact with her. Like nobody wanted to give up their seat to this mother with 3 kids. And this is you. Unlike the others, I didn't avoid eye contact. Instead, I looked her 5-year-old son in the eyes and asked, "Do you want this seat?" He smiled and replied, "Yes, please," before stepping my way. I then shocked him by saying, "Too bad." The mother looked at me pleading, "Please, sir, we are taking the train all the way up to the Bronx." I replied, "Today, your son is learning a valuable lesson at an early age. You can't take anything for granted this world. If you want something, you have to go get it." All right, so you're a sick So a normal person reads this and gets what you're doing.
Right.
It's hustle porn. It's like a satire of
course,
what these aliens from Silicon Valley are posting in their real voice every day. Okay.
Right.
Everyone understands that, but except not everyone.
A few people don't
Not
like
the users on LinkedIn.
And that's
LinkedIn people are like, he's a
People in your
monster.
network.
that's the secret sauce, right? So the thing about LinkedIn is, one, posts stay on the feed for like days, weeks, months. If anybody likes it, comments, it pops on their followers' feeds. So every single person who's commenting, "Please tell me this is satire. You're a terrible person. I hope that kid grows up to kick your ass," all this stuff, that's just going to put on their followers'
That
feeds.
kid grows up to kick your ass.
I got a comment that was something like that, I think. It was something very simple. "Oh, bro, you'll be the one pleading with him for the seat in 15 years.
I love that. It's probably true, too.
It probably is, if that kid was real. And then I also always comment, "Is this a joke? No, I literally hate children." But anyway.
Wait. This guy goes, "That kid will be primed for a career in sales. Good on you." That
Exactly.
guy's dead serious.
No. He gets the humor. Those
he
people
gets
get
it?
the
Okay,
humor.
all right.
But occasionally one or two of them might not, but he definitely gets it. But
Somebody said to you, "Instilling the grind set, one 5-year-old on the one train up to the Bronx at a time. Well done."
shout out to Steven.
That's a dude. He gets it.
He gets
Wait,
it.
before we get out of here, I want to talk about the newsletter business. Like, you guys are both, you're doing it.
Yeah.
Like, full time, solopreneurs or whatever we're calling you guys.
Hate that term, but
Yeah.
it is a term.
But you
That's
guys are
a
doing
LinkedIn
it.
word.
So
Yeah.
what? Jack, you just wrote a piece actually. Well, this is really not on the newsletter per se, but you wrote it on your newsletter. What have you
did.
guys learned? What should we learn?
He learned, don't get kicked out of an Ivy League school for LinkedIn posts.
So
Fair enough.
Ryan Peterson from Flex Sports, also CBS alum, and he DM me. He said, "If they make you delete it, don't do it." I was like, "Whoa, like you're like a billionaire. This is a crazy message to get."
Yeah.
He's like, "Freedom of speech," and I was like, "You're right." So honestly, I think it could have turned into a bigger benefit for me if I had gotten kicked out for something that dumb. But yes, that's still a takeaway.
You would have gotten a lot of clout.
For Tucker
And then-
Carlson would have
and then
loved to have had
And then
me.
what? And
Oh
then
my
you don't
God.
have
But so,
it
Jack,
anymore.
write a book.
you're new to the workforce and to the newsletter industry, and I
Right.
know it's ridiculously early. But do you think, like, is this going to be your career?
Yeah, no, I think so. I mean, I don't really because of my LinkedIn history, I couldn't really get hired anywhere at this point. So it's like, yeah, I'm kind of all in on this.
We might have a place for you. How many people are you writing for?
On my newsletter, 43,000, and then on Exec Sum, 254,000.
And you're 26 years old.
Yeah.
Keep going.
Sam, what about you? You ever going to go back and work for the man?
No.
That's a good question.
They
but
probably
I don't
call
think
you
so.
like, "Hey, we got an executive editor spot opening up."
It's funny. It's like as soon as I start this, they think that I'm just on the market, but like, no,
Yeah.
I'm actually really giving this my all right now, and it's great.
Oh, like, you think it's like a cry for help?
They
in between gigs, so I'll do a Substack.
Yeah. But no, I think it's great. Like the freedom, the flexibility.
How many? Are you 2 years in now?
I'm
Or-
2 years in,
Okay.
and I have a little over 20,000.
And you love it.
It's amazing.
You're
It's
enjoying
great.
it.
Are you guys
Yeah, I
both
love
in the
it.
stack, or one of you is? Are you
Beehive.
The Hive?
I'm ex-Stack, current Hive.
What are you?
Yeah, I'm on Substack.
Okay.
What's the big difference between Beehive and Substack?
I mean, the business structure-wise, Substack, they make their money from taking a cut of like premium revenue. Or on Beehive, it's just I pay like $100 a month for the list of features, and they have like they're both good. They just have slightly different features, landing page setup, whatever.
Okay.
Yeah.
Got it. We're going to do favorites, but first, did you guys have fun on the show today?
Oh yeah.
Yes? All right. We had a lot of fun. It's probably the hardest I've laughed in a while. What about you? So it's nice to
Yeah.
nice to get.
100%.
All right.
Yeah, as solopreneurs, we don't do
Yeah.
anything social. So
I
this
just
is
sit in
it.
my room all day,
Yeah, same.
blogging.
Yeah.
It's horrible looking.
Bullshit. You're,
Looking at a wall.
you're doing a lot of travel this summer.
I do like traveling.
All right. All right, let's do favorites. I will start. Did you know Steven Soderbergh has a mini series on HBO Max?
Claire Danes. Who else is in it?
Claire Danes is great in it, as always, and so is the guy from Justified. What's the actor's name?
Oh, Timothy Oliphant.
Timothy. So they're like the parents of a potentially kidnapped kid, and I won't say anymore.
I haven't watched it yet, but I'm 100% going to.
I did 2 episodes, I think, and I think the third comes. I think they come out on Wednesday nights.
Has Soderbergh done any other TV?
I think this
Yeah, the girlfriend experience.
that was TV. That I didn't
It was
watch.
like Showtime or something. It's like it's a series. It's crazy.
Cool.
Anyway, I thought that was cool. My other favorite was Jack's LinkedIn, but we did that already. You're very funny on LinkedIn.
Thank you.
And IRL.
And in real, and
Unlike Ramp Capital.
unlike Ramp,
Ramp
you're
Capital.
actually funny in real life. All right, Michael, what do you got for us?
Your boy Ray Romano.
Yeah.
Did you know he's got a movie out?
No.
Or I don't know if it's his
What
directorial
is it, Ice Age 9?
directorial debut, but he directed a movie. Wait, I don't get it. What's so funny?
What's the movie?
What did you do? What's Ice Age 9?
I don't know. I haven't
Well,
seen
John
him do
laughed.
It's a series of animated movies, the Ice Age movies.
Oh, he was. Oh, I got it. Okay. Sorry.
Oh yeah, he was a character.
So
He was the Mammoth.
Woolly Mammoth, right,
That's his
right.
biggest movie.
Right.
I
right.
That's
saw-
a big movie.
my dad told me to watch this. This is not the typical movie that I would watch. But given that he's, you just saw him on TV, and I love Ray Romano. All
it
right,
was synchronicity, so
It's
you
called-
press play.
it's called Somewhere in Queens, and his wife is played by, I forget her name. It doesn't matter. Here's the line: Leo and Angela Russo live a blue collar life, surrounded by the big personalities of their overbearing Italian American family. When their son's chance at a life-changing basketball scholarship is jeopardized, Leo, who's Ray Romano, risks everything to help him, but may tear the family apart trying to make it happen. Not
I'm
like
in.
a type of movie that
I'm
I would
in.
watch, but it was great. It was great.
I'll give it a shot.
great.
Shout out to Ray Romano. Sam, any favorites?
Yeah, I was gonna just say a general thing of like, try signing up for a bunch of independent newsletters. It doesn't have to be my newsletter, but like try signing up for some of the stuff that people are writing because there's actually some really good stuff out
Shout
there.
out,
Respect.
shout out your favorites.
All right, so the one that came to the top of mind is this guy Blake Millard. He's a financial advisor, and I actually met him at Future Proof last year.
Okay.
And he told me about his newsletter, and he's like, I'm working on this thing. I publish it every night. It's a couple charts, whatever.
Every night. Wow.
Every night. I don't know what it is, but I have to open his newsletter every
Oh wow.
night.
What's it called?
It's called the Sandbox Daily, and it's
Okay.
basically just sort of a roundup of both research and news of the day. But I don't know what it is about like his writing and his presentation. But like before I go to bed, I have to open it and scan through it because
I've seen this before.
like
Blake's a compound
I know
fan.
that.
Go ahead.
I know that if I've missed anything, he's gonna have it, and if I've seen everything that he's covered, then I feel good about my day that I haven't missed anything.
Oh,
So
interesting.
he's capturing a nice cross.
Can I tell you who I pay for?
Yeah.
Eric Newcomer,
Yep.
Mark Rubenstein,
Yep. That's great.
Matt Klein.
Amazing.
Who else? Who else? Who else do I pay for?
who else
I mean,
is good?
Sam Rowe, obviously.
Yeah. Who else is good? Who else are you reading?
I just started reading Jack's newsletter.
All right.
Oh,
He's all
Jack's
right.
incredible.
Oh my
all right.
God. Yeah.
Incredible
I mean,
writer.
Jack's one of the, I don't know too much about you, but it seems like you're like one of the few people who can post on LinkedIn that you didn't give a mother a seat on the subway, but then write something really thoughtful in your newsletter while quoting Elie Wiesel.
Yeah, no, I've got range.
Yeah,
You need to be able
the
to do both.
range is. I'm really impressed by the.
Thank
range.
you.
Let me quote
And
Jack.
I can tell that you enjoy the writing. I think that's the thing. It's like when you scroll
Yes.
through some of these newsletters, you can tell who likes writing and who's doing it for
I
it.
bumped
Yeah.
into Jack. I bumped into you at the movie premiere
Yeah.
not long ago, and I think I said this to you. If I didn't, I will say it to you now. You remind me of me 15 years ago. I was probably 32 when I started blogging, and now I'm 46. But like 15 years ago, I was like compulsion. I have to write today. And I think that came through in the early stuff I was doing,
Yeah.
which admittedly was most of it not very good, but the audience didn't really care. They would go with me
Yeah.
because they could tell I was like compelled to tell the story of what I was doing on Wall Street. And I haven't really seen a writer come along since until you, where I was like, oh, I really feel like this guy is in that phase that I was once in. So I think I told you that, or if I didn't, I'm telling you now, keep going because it's going to go somewhere incredible that you can't even imagine.
I want to quote Jack because he was silly on the show today, but
Wait. I just gave him his flowers. He's going to react. This is like a moment.
Yeah, no, that's
Go
like
ahead.
I appreciate that.
Oh, you wanna
Seriously,
pound it
that's
out?
awesome.
Let's go.
Pound it out.
all right. So sorry to cut you off. Jack wrote 5 things that you changed your mind on. Number 1 was work and traditional jobs aren't prisons you should seek to escape. And here's what you wrote. Quote, there is absolutely nothing wrong with spending 50 hours per week doing a job you like but don't love that pays you enough to support your family and leaves you the free time to pursue activities that you enjoy. Your job doesn't have to be your whole life. It's okay if it simply supports everything else. End quote. You are wise beyond your years.
I agree
There's,
with that.
there's
Oh my
so
God,
much
that's
bullshit
beautiful.
about
What is that in response
Work
to?
for
Like, you
yourself.
have to do what you love, or you
it's-
have
it's-
to be an
well, okay,
entrepreneur.
Quit your
But
day
there are
job,
bad jobs and good jobs.
side hustle.
I consider myself pretty lucky that I like what I do, but also like the editing side of something that's not something I love. That's just like an additional income stream within the writing sphere. Like, that's what I view as like everybody has parts of their job they don't like, and if it like. Yeah, the whole idea you have to like love your job's f***ing stupid. Nobody actually loves what they do every day. Like it's just like find something that's
What if you
really
love
good
it 3
that
days a
works.
week and 2 days a week you hate it?
It's
Isn't that
better
good
than
enough?
most. Yeah,
Yeah,
100%.
and if it pays your bills, if you can feed your kids, if you can take your kids to Disney World, it's like that's probably a pretty
And then
good
do
job.
something you love when
Yeah.
you're not working.
It's plus if you have something you love and then you do it for work, it becomes a job. It's better to like do something you like for
Yes.
work and do something you love, or you don't give a shit if you make money from it or not.
That's good Southern
all the
energy.
sports
right.
guys that finally make it to ESPN or the NFL, like it turns into a job.
Yeah.
What they love turns into a job.
Yeah.
And it's okay to have by the way, it's okay to have a job. Not everyone has to be chasing their passion. If you could find aspects of your job that you do love, it's enough.
Yeah.
Yeah,
It's enough.
Like just like it can be rewarding just to be playing into your strengths.
No, but
Like,
Sam, seriously, what's your favorite?
oh, let me throw out one more favorite while we're on this subject.
Yeah.
Dan Toomey, video
Ooh.
producer at Morning Brew.
He's very
awesome.
funny.
You
Friend
got
of
to
the
follow
family.
his Instagram. You got to follow him on TikTok
What
or
is it?
YouTube.
I
Dan
don't follow him.
Toomey,
I don't follow him on Instagram.
Morning Brew.
Ooh, I was in a
This guy
video
is
with
fucking
him
genius.
where we were
He's-
making fun of LinkedIn. I'll send it to y'all. It's hysterical.
He's incredibly talented.
A genius. Like everything that he does, and with his team, you got to watch it. You will.
How do you
How do you
spell
spell
Toomey?
it's
Toomey.
DHTOOMEY.
Yeah,
He's also so. I saw he did a stand up show that I went to like a month ago.
Right.
He posts on his Instagram when he does stand up. Highly recommend seeing him do stand up. Like I didn't know if he'd be as funny when it wasn't scripted. He's just as good. Like he's just a genuinely
Shout
funny
to
human.
Dan. I'm actually going to see somebody do stand up tonight. I don't know if it's stand up or not. Going to Alex Edelman's one man show on Broadway. Do you know anything about this? Supposedly it's like the hottest show on Broadway, but he's like a comic, and I don't think there's anyone else. So it's. But am I going to a?
That's tough.
Am I going to comedy?
What's this person's name?
Alex Edelman.
Is he like a veteran comedian? Like, is he
related
No,
to
he's a kid.
Julian?
He's in his 30s.
Oh, is he? Well, that's kid
But he
now.
was like on all the big like late night talk shows. Had him on recently.
What's his morning routine?
We follow each other on Instagram, and then all of a sudden, and then I just think, oh, he's funny. Like he's a stand-up comic.
Wait, did he slide into your DMs?
No, and then all of a sudden he's like everywhere. I'm like, holy shit, this guy has his own like Broadway show. So that's I'm going tonight.
How exciting is that? That there's like people you never hear about, and then they just explode out of nowhere.
I love that stuff. Yeah, I'm going to support it. I don't even know what the show is about. I guess I'll tell you guys next week. All right, we're gonna wrap it up
Wait,
from
hang
here.
on. Jack had one more thing.
I had my
Oh, do it.
favorite too, but also had one question. You called him a kid and then said 30s. What age number do they go from kid to not kid in your head?
Oh, I'm still a kid
Okay.
compared to certain people I hang out with.
Perfect.
You'll be a
that's
kid
ideal.
forever if you want. It's a state of mind. It's not a chronological.
I agree with that. I love being a kid. I'm
That's
a
right.
26-year-old kid.
That's right.
I was going to say my piece that I liked. I don't know how I found it. It was this blog post by an Anu Adluru called Trophy Jobs. I thought it was super. I ended up like kind of writing about similar stuff in my last one, but just talking about how there's these jobs that like they're put on this pedestal for almost no reason other than they sound like
That's
something
why.
you should want to do. Like everybody wants to be a VC or a founder. While it's not that every job like VC isn't a trophy job for everybody. Some people really want to like be an investor, do VC. Some people really want to found a startup. But there's a lot of people, like especially my age, that just I want to be a VC because the idea of it's cool. And there's that in every
Like I want to be
industry.
an astronaut.
Yeah, like
Yeah,
same
yeah,
type
yeah,
of thing
yeah.
without even thinking
I wanna
about
be a cowboy.
the work.
Yeah.
And then they get there and it's like, oh shit, like this isn't actually an
I wanna
interesting
be-
thing.
Because you know what? It's not that they want to be a VC. They want to be a successful VC.
Yes. Yeah.
don't wanna be
and there's
an
a
ordinary
big difference
VC.
between those two. Yeah.
That's right.
I want to be an Oppenheimer.
I want to be an Oppenheimer.
All right. I think we're good. All right. Duncan, we ready to wrap up? All right. Listen
We're
up, guys. This is important. If you love the show, or if you even just like it a lot, there's only one thing we want you to do. Write us a review. Like, be honest, but write a good review. You can give stars 1 to 5 on Spotify, on Apple, wherever you listen to the podcast. Reviews are important for the algorithm. They indicate to other podcast listeners that this is a quality show they should check out.
On LinkedIn.
So Is that heavy-handed enough? My pitch for all right. Hey, follow Jack Rains on where's the best place to follow you? You're obviously funny
Twitter.
on LinkedIn.
Twitter and LinkedIn. Jack_Rains on
You're
Twitter.
Dark Jack Rains on Twitter.
There we go.
Okay. And the Substack is ExecSum.
Get my Beehive or Beehive guy. My blog is youngmoney.co and then execsum.co.
That's how I know. That's how I know somebody's under 35 and they have like 7 different things you have to follow them on. All right, Sam, you're the ticker. Tell people where they could find that.
Yeah, it's ticker.co.
Okay.
Oh, we're both .co. That's
Yeah,
awesome.
.co is great.
Rock
It's
on,
cheaper
man.
than .com.
Oh, for sure.
But what are you? TKER.
TKER.co. And you can find me on Twitter at Sam Rowe. Threads at by Sam Rowe, I think.
All right,
don't worry about Threads.
You guys crushed it today. We loved having you. Thank you so much for doing this and all the prep that goes into this and just making it a great show. I had so much fun. Mike, you have fun on this one?
So much. Love you guys.
Yeah? All right.
We love
hey,
you.
guys,
Yeah,
make sure to leave us a rating and review, subscribe, follow Jack, follow Sam. We will see you next week.